Turning to Washington, President Trump slated to meet with China's top trade official at the Oval Office today. That's in less than 30 minutes. This is coming as President Trump and Chinese President Xi are reportedly discussing a potential summit in Mar-a-Lago late next month. The Dow surpassing 26,000 points for the first time on this day since November 9th. And that, of course, is amid investor optimism on this news. Joining us now is entrepreneur, Shares founder Joel Shulman. Joel, great to see you here. And obviously, the conversation has been optimistic on both sides,
right,
but it's also gone back and forth a lot.
Sure.
Do you think that we're going to have anything concrete to cling to here? The market's optimism, it needs a little bit more than thin air.
Yeah, you're absolutely right. I mean, we'll see, today, this afternoon, 2:30. I mean, the market's been going back and forth on this information. I mean, certainly it's the biggest news of 2019, maybe the biggest news that we're going to have in many years. And so people are clinging on every little tidbit. And what we're seeing, for example, today, the Chinese markets have moved 2%. So people are focused on the U.S. markets up 50 pips. They're looking at the last 9 weeks being very strong. But it's really the China markets that probably benefit the most in emerging markets, which took a big hit last year.
For understandable reasons, intellectual property, technology,
sure,
these are some of the sticking point issues, and they continue to be.
Yeah, right. And when you look back over the last 90 years or so, in fact, it was 1981, the U.S. had actually a $3 billion surplus to China. So this is a big deal. I mean, we're talking about trillions of dollars at stake here in terms of the difference in GDP between U.S. and China. So there's nothing really bigger on the horizon than what we have right now in this deal.
The president has said he's flexible on the March 1st deadline. As I mentioned, there is the conversation that President Xi will go to Mar-a-Lago, and perhaps they'll hammer out some more details there. Any sense or, from your conversations and what you're hearing, what you're expecting in terms of a timeline when this can be ironed out?
I think in current U.S. politics, I think currently our president has incentive to see a deal go through first,
sure,
as early as possible. But China also has been hit hard. And what people forget that with each day that passes by, the U.S. manufacturers who are manufacturing overseas have incentive to move to other markets. And so China has incentive to also do this deal soon, because otherwise the supply chain shift can occur.
In terms of earnings season, the buzzword, right? We joked about it. Every company that said that they saw weakness in China or that they were worried about China when they were giving their guidance and their outlook. Your thoughts on how China is managing its own economy right now as it comes to the negotiating table?
Well, a couple of things. One, last year we tracked, we did a search on every single company that came out in the U.S. that mentioned China in the quarterly results. And it turned out the difference was not appreciably different between those that mentioned China in their earnings reports and those that did not. They basically all fell en masse. The good news about this year is that we're seeing companies both go up and down based on earnings announcement. 2/3 have actually beat guidance, and so as a result, we've seen the markets soar. But in terms of China, they again have a market that's highly levered. The real estate bubble is very strong, so they have incentive to see this deal go through very soon.
U.S. markets here, you're still bullish on the rest of 2019, and you think valuation levels are where they should be?
I think they certainly have approached that in U.S. markets. I think we still have another 5 to 10% to go. If the China deal is positive, maybe it's closer to 10%. The small caps still have about 8% gap from where they were last year. We've seen, for example, in our entrepreneurial stocks, they're up 37%. Mid cap since Christmas, 27% up since Christmas, and large cap and small cap. So we've had a big, a strong performance since Christmas. There's a little bit room left to go, I think.
In terms of risks, what's your top risk to the market right now?
I think the political risk right now in the U.S. Well, first and foremost, it's a China deal, right? Any bad news of the China deal, and things are going to go south in a hurry. But because the market's been up 9 weeks in a row, people forget that a year ago this time the markets fell by about 5 to 10% the second week of February. We could see something like that occur again if we don't have strong news on China. I think the political risk that our president has, can certainly make markets very nervous, and what may come forward with that.
Really quickly, a lot of cash sitting on the sidelines. It's a wait-and-see approach to see exactly how all of this works out. If we get a resolution, if that cash comes back into play, will it continue to fuel the market, that investment?
Well, we've seen a lot of money pouring into actually international markets. And so if you look at what's happened year to date, money's pulled out of the U.S. markets despite the fact that they've gone up. People aren't recognizing the $15 billion that's pulled out collectively. respectively. About $5-6 billion has gone in international. We actually launched a non-U.S. small cap ETF last year, at the end of the last trading day of last year, because the markets were beat up so badly last year. We're actually bullish on non-U.S.,
Okay.
especially small caps.
All right, great to see you, Joel. Thank you.
Thank you.